What's up, guys? Welcome back to DCA. Today, what we're going to do is take a look at the data behind the death cross. So, lots of people talk about the death cross, which just occurred on the 14th of this month. But, what we want to do is take a look at what actually happens after a death cross. There's a lot of misinformation out there on YouTube in particular. So, we want to just clarify what is typically happening after these events. The first death cross we're going to look at is September 28th, 2011. Notice that we had just made our market cycle peak and then we went down and we're heading down, approaching our market cycle bottom, in fact. And what we have here is the 30, 90, 180, and 365-day returns after the death cross. We also have marked out what was the worst day that occurred after any given death cross. So the worst day after this death cross was down about 60%. Okay. And that happened within about 50 days of the death cross. Now you'll see that this death cross, you were down 33 at 30 days, 14% at 90. And if you go out all the way to a year, you were actually up 159%. And that's because we had started our next bull run. Okay. So if you were just able to hold on for a year, you would have been fine. We went on our bull run into 2013, made our first market cycle peak, made our second market cycle peak, and then came back down to here where we had our next death cross, which happened on April 14th of 2014. Okay. So at this time, there was a dead cat bounce that happened about 90 days after the death cross occurred, and you would have been up 43%. But remember, this was after a market cycle peak, so we were heading into a bear market. So we headed into this bear market and went down to sideways. And, what was our worst that you would have been down, after this death cross, which occurred right here on April 7th of 2014? And that was 62%. At worst, you would have been down 62%. And notice this happened about 280 days after the death cross. We then had a golden cross followed by an almost immediate death cross. Okay, so our second death cross happened right here. You can see that we were just in this long winding downtrend during this time. Okay, and this time, 33, 23, 43, 53% down at 30, 90, 180, and 365. And your worst that you would have been down after this death cross was about 65%. Now, notice the case sort of switches here though. We go into 2015, we have a golden cross followed by a death cross followed by another golden cross. And at this death cross that we had right here on September 15th of 2015, you see it was just all up from there. All we did from this death cross was go up. But we had been in a period, if you measure the length of time that we had been just trending downwards, we had been heading down for about 650 to 700 days at that point. So we had been going down for quite some time. And that's perhaps why this particular death cross, you were only seeing yourself in profit after it because we had been going down and nothing but going down for 700 days nearly. So we went into our 2016, 2017 bull market, hit our peak here in December of 2017, and then came down and we had our next death cross. And this occurred right around March, the end of March of 2018. And you can see this time, yet again, we have this dead cat bounce where we went up to 37% up from the point where we hit our death cross, which happened right around here. We were up and then we just started going down. All right. And remember, this was a long-winded downtrend. And yet again, at around 260 days, we were down 53%. So if you recall, two death crosses prior, at around 280 days, we were down 63%. So that's been one common theme so far is after a death cross, there's been a high probability that even if it's not in the immediate term, there will be points in the market cycle where following a death cross where you are down a significant percentage. All right, so we've seen 60%, 63%, and now 53%. Then we have another golden cross that occurs here in April 2019. We go on this mini bull run in 2019, which only basically occurred for Bitcoin. Nothing else was really doing that well. And then the market turns back down to the downside. We have another death cross, which occurs right here. And this time, yet again, you're looking at a down period, down 25, down 10, 19. But if you waited a year, you would have been up around 41%. But yet again, the common theme that you're seeing after a death cross, down 60% at around 140 days. So there's been a major event the majority of the time where, at least for a very short period of time, you are taking a major hit. So that's bringing us to, much closer to where we're at now. And what you see here is we don't have the full data period yet because our last death cross occurred, out here in June. So our last death cross was in June, right after that May capitulation event. We were down 13% in the shorter term and a maximum of being down 16%. So this one we were sort of spared this major hit after the death cross like we've seen in the past. But remember, we've only been out from this death cross now, this first death cross, we've only been out about 212 days. A lot of times in the past, your worst down period came 260, 280 days or so after the death cross. So we are in this position where we had a death cross, a golden cross, and then a quick death cross again. Okay, guys, so then let's just look at the data with the bottom line. So we're looking at all of the days here in the 30, 90, 180, and 365 day post death cross. And here we just have the numbers. We're also going to look at within a 1 year period, what is the best case scenario and the worst case scenario for each of these death crosses. So the first thing I'll say is I think it's very contextual. So it's all going to depend on sort of where the market is at overall based on when the death cross is occurring. So for instance, right after the COVID capitulation event, we had a very rapid death cross occur while the market was showing strength due to a black swan event. So we sort of have this outlier. So it's very contextual as to when the death cross happens. Another instance of that was in 10/25 of 2015. We had been going down for nearly 700 days at that point. So when the death cross happened, it didn't matter because the market was ready to move. So, we had a prior golden cross into a death cross, and it didn't matter that we had this death cross because there were no sellers left. There were no sellers left in the market. So you basically have these two outliers where you had a death cross, where you had nothing but up. So the market, you were never down, in fact, after the death cross. So imagine the death cross happens and you're only in profit. There were 0 days literally where you were down after that. So, overall, 5 out of 8 times that we've had a death cross, within 30 days, you would be down. Quite frequently, you're down, but you're only down about 4.5% on average. So very small overall. And then the picture gets even brighter from there. At 90 days on average, you're actually up 10%. At 180 days, you're up about 6%. So if we look at it in terms of, number of instances of each event, 5 out of 8 times following a death cross, you were down at 30 days. At 90 days, it's only about half the time that you're down. At 180, it goes back up to 5 out of 8. So most of the time you're down at 180 days. But then once you hold out to 365 days, it just becomes the story of Bitcoin. Even if you're down, if you hold, you'll eventually be back up. And we've showed that, in videos in the past, people that have held for at least 1 year, 80% of the time they're up after 1 year period. In the short term, like we said, it's very contextual as to how it plays out. And another thing is, if you look historically, these are the worst case instances after 1 year. And one, two, three, four, five out of 8 times you have been down 50% within 1 year. And the fact of the matter is that, we've been in a bull run for some time. We've been in an extended bull run at this point, with periods of, obviously from May to June, we were quite a bit down, but we came back up, set a new all-time high, and now we're trending down again into a death cross. We've seen after setting an all-time high, every single time after setting an all-time high, when we make a death cross, it's typically not a good sign. That's one thing we can say. After an all-time high, making a death cross has been, pretty unfavorable news. It doesn't mean that this has to happen. It doesn't mean that it needs to play out like it has in the past. But in the past, after making a new all time high and then hitting a death cross, it's been rough times ahead. All of these times where we've seen positive results after a death cross, they've been after extended bear markets, and we simply haven't been in an extended bear market. We made an all time high in April, and then we made another all time high in November. And in fact, we've made our second death cross within, about 6 or 7 months of each other. You need to consider contextually where we're at in the market. We just made an all time high. And in the past, after making an all time high, quite frankly, it can get dicey from here. So we need to watch. We're in a downtrend. It's just worth considering that, potentially we could be heading into a longer period at minimum of consolidation. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual,